Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Thursday, December the 1st, 2016. See if I can make this as quick as possible. All right, so basically what we have here is the SQQQ, and as you can see, the market is in breakout fashion, breaking out into a positive post-wave scenario with momentum pointing higher. Why is this inverse ETF breaking above the Kumo cloud like this and starting a bull run? Well, the answer is very simple. The NASDAQ 100 futures contract today was down almost 100 points. Not to mention, in the beginning, you had a 100-point trading range. The high today was 48.27.5, and the low was 47.22 3/4. So you had about approximately 100-point trading range throughout the day session, and then the market also closed down tremendously. So in essence, this is just a catastrophic situation. Remember what I told you in the prior video. I said that the stock market cannot really resume and do what it needs to do without the participation of the NASDAQ. So that's basically what you have been seeing here. It is also to be noted that we've closed and dropped below the Kumo cloud now. So this is bearish. Also, you see this crossing patterns trying to take shape here. Momentum's crossing down, but now the shorter term trend line is looking like it wants to cross below the longer term trend line. Even though it's doing it inside the Kumo cloud, if it crosses down and breaks below the Kumo cloud, that's all she wrote. You're going back to your pointer that I warned you was going to happen. Let's take a look and see what happened with the Dow futures. You can see that market was kept propped up pretty much all day, and the futures at one point, I think it closed up like 25 points or something. But here you go. They're keeping the Dow propped up. The Dow is the last bastion of hope. They have to keep that going in order for people to keep drinking the Kool-Aid. Can they do this forever? Of course they can. Can we see Dow 20,000 by Christmas? Absolutely we can. But while that's happening, you cannot ignore what's happening in the NASDAQ 100, and that is carnage. All right, on the daily chart. Here's the weekly chart. Let's see what's going on now. All right, on the weekly chart, it's not as bad. Still in a negative post-wave position, but it's trying to go positive. It's just looking for a support, testing the trend line here. We may even come down to the longer term trend line down here, the 45 handle. Is it possible? Absolutely, it can happen. We don't know yet, but this is not a good sign for continued bullishness. Yeah, you're in this trading range. The range has been established by this bar here, and this bar was done on November the 7th. So this is the range right here: 48.79 3/4 on the top side, 45.58.50 on the bottom side. So that is quite an amazing trading range to deal with. You got a 300-point trading range. So this market can just do whatever it wants to do up and down and still maintain its bullish positioning on the weekly chart. So what does this mean for gold? That's the elephant in the room. You want to know about gold. Let's take a look at gold. Right now, gold is continuing its decline, and we are dangerously close to pulling off a close below the Kumo cloud on the weekly chart. That would be extremely bearish. If that happens, 1100 is the next downside target after 1150. So 1150 could hold as a strong support. If it fails, then you go quickly to 1100. And then you bounce around the Kumo cloud in a sideways fashion for a minute. That's the first scenario. The second scenario, the one that I would rather see, is on the daily chart for the momentum to start turning up, because then that would put an end to the downward descent. All right, but right now all momentum is pointing down and increasing in downward strength. So this doesn't bode well for bullish positioning. if you were bullish the gold, you would have been liquidated on the paper side of things by now. Right now, the long paper strategy is holding out. The DGLD, the Dust, and the JDST are being phenomenal right now because of this decline in gold. So let's see here. Take a look what happened here. All right, on the DGLD, it actually pulled back. So kind of a reversal thing happening around here. This is the beginning signs of some support for gold because we do have this gap that we need to contend with. So we could be seeing that. So as the DGLD is topping out, gold futures could be bottoming. Let's see if we get any more significant signs. And let's say dust. Let's see. Same thing. It came off too on the close. And this is a daily chart. All right. It's coming off too. Let's take a look at JDST. As we go into the mining space and the junior miners, same positioning. Same thing. So we could be pausing in the downward descent in the gold futures right now. So we need to watch. Now, that doesn't mean that that's a buy signal. It doesn't mean we've hit a bottom. It just means that there's a temporary pullback, a ceasing of the downward momentum. And if we take a look at UGLD, we see that it has not broken out yet. Okay, here's the descent. The momentum is still pointing straight down. All right, so we have to watch and see. Now, will we get some rally alerts on this? Possibly. But until this market can stop falling and build some sort of a support, because that's what it's looking for now, hey, its shorts are still in order in the gold market. Let's take a look at the silver side of things. All right, and the silver futures a little bit different. There's some green on the screen. All right, so the downward descent has already paused for the moment in the silver, but that does not mean that silver is a buy. It just means that we stop the descent. Yeah, see, it has not done anything. It's doing nothing. So really no strong buy signals in the metals right now. Everything is pointing down. If you look at your gold miners, looking at the GDX, same thing. We've just paused for a moment. But the question is, are we pausing to set up the next leg down? That's what you got to be wary of. So I don't see it's a time to accumulate long positions in the miners just yet. If you're holding mining shares, you're just holding them. But as far as accumulating new positions in the miners, it's just not time yet. We have not seen support yet. Here's the JNUG on the daily chart. Do you see anything here? Nothing. Nothing's happening here just yet in the JNUG. It's just flat right now. So market's not ready to turn just yet. Taking a look at the crude oil. Crude oil has the old okie doke, just like I said. It hits you with the okie doke. So on the daily chart, made you think it was gonna collapse. Look at all this price action happening outside of the Kumo cloud to the bottom of the Kumo cloud. It was all bearish, right? Then look what the market did to you. Just turned on a dime, just like that. Look at that. Still sideways, but look at it. Now it's trying to get back up here and do what it needs to do. And it broke that $50 barrier. That was the question we had in last night's video, if you recall. The question was, is it going to be like the US dollar when it kept hitting par and falling down and then it finally broke through it hardcore? Well, that's exactly what crude oil just did. It just answered that question and said, yes, it wants to be like the dollar. That's why they call it the petrodollar. So the petro side of the dollar is trying to catch up and build something and break out and follow the dollar. Here is the US dollar side of things. Alright, pause a little bit so far. That's on the weekly. Let's pull up the daily chart so we can see what might be brewing. Alright, here you go. So it's cooling off a little bit. Alright, not a lot going on. All right, so let's go. Let's look at Dig for a second. All right, as you can see, it moved. It spiked up huge today, and then I mean it hit 44, which is a new high, and went out on a 42.44 close. So significant pullback, significant reversal up here. Is that just taking a break? Or are we going to lift off again tomorrow and go here? Or something else brewing here and we've topped out and we're going back down again? Remains to be seen. Let's take a look at Doug. See if we can get any clues here. Alright, on the inverse ETF side of things, alright, it reversed from falling like it was, but there's nothing bullish on this chart yet. There's nothing bullish on Doug. Not at all. Everything is still in a bearish position, which means we can expect more upside to come in the crude oil market within the next 3 to 5 days, more than likely. All right, so I've been getting a lot of questions about other tickers. Like, let's see, here's AG, First Majestic, on the daily. It's broken out now. It is actually broken out. It is trying to go full pulse wave, but the only problem is we got this overhead resistance to contend with, and then it puts us inside the Kumo cloud. So anything can happen. It could poke its head up only to fall back down again. We just don't know what's going to happen. But it is trying to go positive pulse wave. The last attempt back here failed. Okay, it failed. This right here failed. Then it popped up, and then it failed. So we're just in this elongated trading range here, and really haven't broken out. Just a lot of false breakouts or false attempts. Eventually, though, it should be able to punch through this and keep right on going back up to 12 and get out of the cloud and get up to 14 and establish that $12 support base for the next leg higher to 18. That is the plan. That is the trajectory, but we don't see it manifesting in the algorithms yet. All right, let's see. I can't remember all the things everyone's asking me about. Someone asked me about Pretty Ricky. Let's see what's going on with Pretty Ricky. All right, Pretty Ricky right now is just bouncing around too, trying to find a support bottom so that it can decide if it's going to go full pulse wave or not. At some point, though, at some point, this 1166 is really not a strong resistance high. It will be challenged and taken out at some point. 12 is going to be the new support at some point once it can get going and get out of this bearish positioning. One thing it has on its side, Pretty Ricky, and that's the ramp. This is an amazing ramp right here. Look at this. Look how steep it is. A ramp like this can cause prices just to skyrocket. 15 could end up being the new support here. But we gotta get up and running first. This downward momentum is putting pressure still on the price. All right, so and this is a weekly chart. So for the last couple of weeks we've been under pressure. Can't rally. Not really falling, but can't rally. So that one is definitely one to still watch on the radar. Looking at GG ticker symbol. Pretty much the same thing. You know, it's trying to find a bottom. It's bearish here. Trend lines aren't below the cloud. Price action is happening below the cloud. But until we get the trend lines following suit to add that momentum push, it's just in a bearish situation and it's flat right now. Not hitting new highs or lows. Alright, let's look at NASDAQ. Alright. Nice run up on the spike on the weekly here. And then now we're just kind of consolidating some of that. I think this blue momentum line acted as a great support. And I think now the market could be ready to kick off again and go into new highs. This one's still very bullish. Can't forget this ramp over here either. Moving over to the daily chart, daily side of this. Yeah, this is a buy. This one's looking like it wants to do something. As a matter of fact, this chart, this part of the chart right here, looks almost identically similar to Bitcoin. Remember the Bitcoin chart? Remember the last Bitcoin videos I was doing before it broke out again? I was warning you, telling you what to look for. It looked just like this right here, identical, identical. So this one is still a buy in my book. There were some other ones people asked me about, but I can't think about it right now. So let's just move on and get to bonds again. Ticker symbol TLT hit a new low. Hit a new low today of 117.64. My how the mighty have fallen from the 140s. All right, up here, unbelievable. So the price structure is still happening, but again, you got to deal with this gap. Got to deal with this gap. So rates could stop going up temporarily while this gap is being reckoned with, and if the decline continues after, if it reestablishes after this is dealt with, then we can talk further. But for right now, rates have no choice but to go up, because look at this. It's gapping down now into new lows. A gap down is just as powerful as a gap up. And there are runaway gaps, breakaway gaps, gap, gap, gap. This is not a good sign, but it has to be reckoned with, this gap and this one here. So a lot of interesting things still on the horizon. So there's so much to talk about, but absolutely not that at all to talk about, because we're speculating about things that haven't happened yet, and that's with the Trump presidency. Also, the academy kicked off December the 1st today. Our first students were the premium members at the trading room, and it was met with amazing results. People are loving it, and we have more installments that are yet to come. It will be opening up to the general public shortly. So if you are interested in attending the academy, what you want to do is get yourself on the mailing list, and to do that, you go over to pulsewavetrading.com and register with the site. pulsewavetrading.com. Register with the site, and when those up and coming events come, you will be notified. You will receive an email letting you know that it's time to go ahead and register and all that good stuff, and I'll give you all the details. As far as the rest of you who I get a lot of emails and a lot of messages about not only the academy, but about the services, learning the pulse wave system, and how to get involved with that. All you have to do is go into the website. Everything you need to know as far as your questions will be answered right there on the website. It's very simple, and what it is the access to the premium trading room is free with your when you purchase a subscription to the weekly pulse wave price triggers. All right, so that gets you free access to the trading room, where you have mentorship by yours truly and other traders from around the world. You also get free access to the academy, and you also get free alerts and things of that nature throughout the trading day, and trading different things that go on. A lot of things that I'm able to talk about and post in the trading room do not make it to YouTube. All right, just so you know that, because there are a lot of things I can't go into on YouTube, but I can do that in the trading room. Also, I'm not restricted as far as the length of the videos and things that presentations that I make, like we are on YouTube. Can't do it, but I can do it on the trading room and on the website. So when you subscribe to those premium pulse wave price triggers, you also get access to the restricted parts of the website, and there's just a bunch of goodies there for you. So if you have not done so, go on over to pulsewavetrading.com and peruse the website. It's our new website. There's a lot of information on there for you, so that you can get acclimated to the pulse wave system. And with that said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace. The stock market cannot really resume and do what it needs to do without the participation of the NASDAQ. So that's basically what you have been seeing here. It is also to be noted that we've closed and dropped below the Kumo cloud now. So this is bearish. Also, you see this crossing patterns trying to take shape here. Momentum's crossing down, but now the shorter term trend line is looking like it wants to cross below the longer term trend line. Even though it's doing it inside the Kumo cloud, if it crosses down and breaks below the Kumo cloud, that's all she wrote. You're going by NASDAQ 100, and that is carnage. All right, on the daily chart. Here's the weekly chart. Let's see what's going on now. All right, on the weekly chart, it's not as bad. Still in a negative post-wave position, but it's trying to go positive. It's just looking for support, testing the trend line here. We may even come down to the longer term trend line down here, the 45 handle. Is it possible? Absolutely, it can happen. We don't know yet, but this is not a good sign for continued bullishness. Yeah, you're in this. Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Thursday, December the 1st, 2016. See if I can make this as quick as possible. All right, so basically what we have here is the SQQQ, and as you can see, the market is in breakout fashion, breaking out into a positive post-wave scenario with momentum pointing higher. Why is this inverse ETF breaking above the Kumo cloud like this and starting a bull run? Well, the answer is very simple. The NASDAQ to your pointer that I warned you was going to happen. Let's take a look and see what happened with the Dow futures. You can see that market was kept propped up pretty much all day, and the futures at one point, I think it closed up like 25 points or something. But here you go. They're keeping the Dow propped up. The Dow is the last bastion of hope. They have to keep that going in order for people to keep drinking the Kool-Aid. Can they do this forever? Of course they can. Can we see Dow 20,000 by Christmas? Absolutely we can. But while that's happening, you cannot ignore what's happening in the NASDAQ 100 futures contract. Today was down almost 100 points. Not to mention, in the beginning you had a 100-point trading range. The high today was 48.27.5 and the low was 47.22 3/4. So you had about approximately 100-point trading range throughout the day session, and then the market also closed down tremendously. So in essence, this is just a catastrophic situation. Remember what I told you in the prior video. I said that